have one rule which allows me to avoid choppy price action. So if you're an opening range breakout trader, here's what that rule is. Just a disclaimer, this is not coming from a multi-million dollar successful trader, and I don't sell a course. I did quit my job this time last year to pump 6 to 15 hours a day into learning how to trade, so I might as well just share what I learned with you guys. Right, so let's just say that this is our opening range area, and the opening range is dictated by the top wick and the bottom wick of the opening 15-minute candle. Above this opening range high, we have buy side liquidity, and below this opening range low, we have sell side liquidity. As we know, when price sweeps a level of liquidity, like for example this New York high, price often sweeps this level and then reverses in the opposite direction. The same thing happens within the opening range. Now, if for example the move of the day is bearish, what we will often see is price moving around within the opening range. We then may expect a sweep of the buy side liquidity, a retest of this key fib level, and then we move down for our move of the day. If for example we are bullish for the day, which means we are moving up, it is common to see price navigating around the opening range, a sweep of the sell side liquidity, a retest of our fib level, and then we will see our move of the day. We saw this last Wednesday and last Tuesday on ES futures during the Asia session. We swept the sell side liquidity below the opening range, came down to retest the fib, and then we made our move for the day. On Tuesday, we swept the buy side liquidity above the opening range high, and then we saw our move for the day. I call this a single side liquidity sweep, and this is one of the best case scenarios you'll find when price action is actually very good, but sometimes we do a double side liquidity sweep before we make our move for the day. And this is a perfect example which you can see right here. We swept the buy side liquidity above the orb high, we swept the sell side liquidity below the opening range low, alongside this New York low, and then this is when we see our move for the day. Now this is my rule on as to when I close my laptop and consider this a choppy day. If we sweep the buy side liquidity and then we sweep the sell side liquidity, but we fail to break through this opening range high with displacement, more often than not from all the back testing I've done, this just is going to create a really choppy session. This was last Thursday's example on ES futures. You can see we swept the buy side liquidity, then swept the sell side liquidity, but we failed to break through this orb high with displacement. Well, that is where I close my laptop. Because as you can see, all we did from here on out was just range in between these levels all the way through to London. That is my rule on how I avoid chop. I'd be interested to hear your thoughts in the comment section on if you do something differently. I hope that helps. You can thank me later.